Good afternoon. It is Monday, August 20th, 2007. This is Brian Shannon speaking from Alpha Trends. The market has closed, and the SPY, the spiders, I've shown them up 2 cents right now. Basically, very little change here today. And a couple of things should be very obvious to you on this daily time frame that we're looking at right now. First of all, we are in a downtrend. We've got a declining 50-day moving average, and that makes it guilty till proven innocent. So we've got to cast an eye of suspicion on any rally that we have here. In particular, when you see, as we have the last 2 days, that volume is really dropping off very rapidly here. That to me suggests that the sellers could take control very easily once again. The buyer's interest, it just isn't there right now. I think that we've got a couple reasons for that. One, we've got this 200-day moving average right here, and the buyers have been unable to push it above that level for, what is this, 3, 4, 5, 6, 7 sessions right now. It's closed below that 200-day moving average. We've got a declining 10, 20, and 50-day moving average. That all says the buyers are in control, and this looks like a low volume bounce in a primary downtrend. So continue to be very suspicious. There will be stocks that individually can rally. However, it's going to take a lot to turn this market around, and you have to be very defensive in your approach to this market and slow to buy into the bullish case. There is a bullish case that you could potentially make here on this shorter term time frame, and that would take, I think you'd need at least a move past 146 to think that maybe the shorts could get squeezed again up to that 150 level or just shy of it, near that 50-day moving average. And I'm just trying to outline, I'm not making a call here, I want to outline a potential scenario, and that is that we've got this potential for an inverted head and shoulders pattern on the 10-minute time frame. Now breaking the neckline would basically occur about 145.5 or so, but I wouldn't think that the buyers really have control until it's above 146. So maybe it breaks that trend line, sucks some longs in, and then fails. We do still have a declining 5-day moving average, and the daily time frame takes precedence over any little intraday pattern that you're going to see here on this shorter term time frame. So the longer term time frame is still down. Therefore, when you see these setups like this, don't go all in. Be real suspicious. I also pointed out last week that if you take the high from August 8th to the Thursday low, that the market has bounced up towards this 2/3 retracement level. Here we've got the 38%, 50%, and 61.8% level, and the market's finding the resistance in that area. That's also about where we have that 200-day moving average. So this to me is looking more like something that will likely fail. The evidence isn't there yet on the short-term time frame to be a short seller. I think maybe breaking below 143 still, that's probably the level where the sellers could really step in here and take that control back, and maybe we see a retest and perhaps even lower lows. But right now, it's too early to say either way. The market may just decide that it's going to turn sideways in here and digest some of the volatility that it's seen recently. That's the other scenario. Again, looking at the 30-minute time frame in that same situation, 146 I think is where maybe we could see more upside, but below 143, that's where I think the potential for a real continued breakdown occurs. If we look at the short-term time frame, the 2 minutes, you know, we've basically got a neutral market in here, so not much reason to really look at that too carefully. Semiconductors, SMH, they're right up to the level where I have been anticipating that a bounce might take them to, which is about that 37 level. 37, 37.5 really. Again, we've got the 10 below the 20, below the 50. The 50's flattening out. The market did bounce from that 200-day moving average, but we've got the same thing here. Diminishing volume. That says the buyers just aren't that aggressive in here, and the control in the short term could really shift back to the sellers without very little fight from the buyers, is what it's looking like to me. Looking at the 10-minute time frame, you see that 37 level. That's where we're testing in here. Let's take a look at the 30-minute time frame just to back it up a little bit. 37 to 37.5. If we can make it back up above that 37.5 and hold there, then maybe the story is a little bit different, and we're just due for more of a sideways action, and maybe get back into that 37.5, 37 to 38.5 range. But right now, the burden of proof remains on the bulls in here. This market is very vulnerable to further downside, so just continue to go slow and be careful in here. The IWM, we've seen that the 200-day moving average has repeatedly acted as a place where the sellers regain control of the short-term trend here over the last 2-3 weeks, and we saw that last on Friday. We do have a 10-day moving average about to cross up through the 20, which indicates more of accumulation and suggesting maybe some sideways action in here. So maybe this market is just digesting in here, and the volatility may be diminishing. But again, we have had strength recently, and that strength has come on diminishing volume. So continue to cast a very suspicious eye on this movement. However, again, you have to look at all potential scenarios. And I think that moving back above 80-20 or so, that could take a lot of the short sellers off guard and potentially squeeze them higher. Odds don't favor it, but it is a possibility. And while we're looking to trade based on what the odds give us, we always have to be aware of all the potential scenarios just so we don't get caught blindsided and don't accept large losses that can come from being stubborn about one particular belief in the market. The odds do not favor a breakout to the upside with a declining 50-day moving average, but again, it's just something to be aware of. The Nasdaq 100, last week we were looking for a bounce from the 200-day moving average. That's what we got, and now it's bouncing higher once again. We've got the declining 10, 20, and 50-day moving average here, and again in this market, diminishing volume on the rally, saying that the buyers just aren't really that interested yet. I think they're looking for more proof that this fundamental mess is behind it, and no one can be sure of that yet. So they're being very cautious in here, and that continues to be, I think, the prudent course of action. We've got a series of lower highs and lower lows, and falling short of that 50-day moving average will continue to keep us in that official downtrend of lower highs and lower lows. Now the market is making an attempt to rally up towards that 47 level that has been so important here over the last couple weeks. But again, the diminishing volume says that this rally is feeble and not something that should be trusted. So be very careful. Be ready to exit any long positions quickly in here. In particular, I think if the market gets back below 46. However, getting above and holding above 47.15, 47.20 could take a lot of short sellers off guard here. Odds don't favor it once again, but it's just something to be aware of.